Hola mi gente and welcome back to the channel. My name is Sean and this is We Are Investing. On today's video, we're going to talk about SOFI stock. We're going to do a deep stock analysis to try to come up with an ideal entry price for this company. Now, I covered this stock a couple weeks ago when the stock was moving up. I pointed out the double top and I also talked about the stock offering and why I thought the stock was looking like it was about to pull back. Well, now the stock has pulled back from that high of around $25 and it is looking more interesting. But the purpose of this video is to try to identify a price target to get into a position into SOFI. Because if you don't watch this video, the main thing to take away is that SOFI is an interesting company with a lot of potential. But you have to pay the right price considering that there are many risks with this stock. In addition, in this video, I am going to show you an investment strategy that will make you money as you wait for the stock to fall to the price that you like. So with that being said, I hope this video is less than 10 minutes. I hope I'm able to provide you guys with a lot of information, and let's dive into SOFI. Now, one thing that I do like about SOFI is that they're beating their own guidance. The guidance that they gave for the third quarter of 2021, they beat guidance by 13% on the low end and 9% on the high end. Not only are they beating the quarterly guidance, they're also raising guidance for 2021. For the fiscal year, they are now raising their guidance to have net revenue of over $1 billion. Now that's a huge accomplishment because if you take a look at the net revenue growth year over year, that's over 60%. So SOFI is definitely increasing the top line by a ton. And that's why it's interesting. It's a growth stock in the financial sector. And in my personal opinion, I see an easy path for SOFI to boost that revenue in the upcoming years. The path that I see is through their bread and butter, what started the company overall, and that is their student loan originations. And if we take a look at this slide, we can see that student loan originations in 2018 was around $6.5 million. In 2019, $6.7 million. Then in 2020, it took a drop to $4.9 million. And in the last 12 months, we're sitting at $3.8 million. This is because of the pandemic, and this is because a lot of students do not have to pay back their loans right now because of federal rules. It is my personal opinion that that business will do much better in the upcoming years. However, home loan originations might have some headwinds. If rates are to rise and mortgage rates are also to rise, then less people are going to refinance on their homes and less people are going to be buying homes as well. And that would be a headwind for that business, meaning that that growth might slow down or it actually might decrease. But overall, I think that net revenues can continue to grow at a nice rate. And that is something that is bullish for this stock. But we also have to take a look at other sides of the story. Now, revenues are increasing at a great rate, which is good, but net income is not doing the same. Meaning that a lot of the money that is coming in the top line is not making it down to the bottom line. If we take a look at the net income for this company, we can see that in 2019, it was negative $239 million. In 2020, negative $224 million. That's moving in the right direction. But in the latest 12 months, it's negative $455 million. So the loss to this company almost doubled over the last 12 months. And that's because this company is not focused on profitability. This company is focused on market share, and they're spending a lot of money to do it. But there is something to be said when a company is losing money like this. It is very likely that they are going to dilute to try to raise cash because they are not free cash flow positive. Now, something that might help with that net income loss a little bit, not drastically, is that they have now applied for a banking charter, which will help with their margins, and that's going to help with that net income. This is also a potential short-term catalyst where traders might play off of this news and we could see a rally in the stock, a buy the rumor, sell the news type of event. Because SOFI is a stock that has a lot of attention and a lot of traders trading in and out of this company. The volume is high. It is one of the most mentioned tickers out there. So therefore, there are a lot of people that are not interested in investing in this company, but are more trading the company for a quick buck. Now, before we head into the valuation, let me give you my overall opinions on SOFI. This is a company that has seen extremely good growth in the top line in revenue. However, they are spending a lot of money to get that revenue, and that's why we're seeing a bigger loss. That's why we're seeing a bigger drop in net income. The company is not yet profitable, and the businesses that they run are typically lower margin. There is a potential that later down in the road, they won't have to spend as much money on marketing and acquiring customers. and that's going to help their margins. We also have that banking charter that's coming out that would also help their margins. But overall, the margins are only going to get so good. So when we take a look at this company, I have a price to sales multiple in mind. Typically with tech companies that are experiencing good growth and have higher margins, I'm willing to pay a price to sales multiple of 10. And that's forward looking. In my personal opinion, I'm okay paying a price to sales multiple of 10 for the trailing 12 months, or taking a look at the forward looking and doing a range around 6 to 8. Now real quick before we move forward, just know I did all of this on WEBULL because WEBULL has everything you need to do a proper stock analysis. And right now they are currently running a stellar promotion where you can get 2 free stocks worth up to $2,300. The way the promotion works is if you use the exclusive link down below in the video description, when you open up an account with WEBULL, no money down, you will get 1 free stock worth up to $300. Then when you deposit $100, you will get an additional free stock at up to $2,000. On top of that, if you sign up for crypto trading, you will also get an additional $5 for trading crypto. It is an exclusive link for my partnership with WEBULL through the link down below. If you're interested, I highly recommend it. WEBULL is a great brokerage in my personal opinion, and it's well worth the time. All right, here's the valuation for SOFI. Now, the discounted free cash flow valuation does not work because this company doesn't really have free cash flow. So we can't discount that future free cash flow right now to come up with a fair value of the company. But that does not mean that it's not a buy. It's just a different type of stock. This is a growth stock. And if we take a look at what I'm doing with revenue, I'm using 60% for 2021 because that's guidance, around $1 billion. And then after that, I'm being pretty generous and I'm adding 50% revenue growth for 2022, 23, and 24. That might not happen. This is actually quite liberal in my personal opinion. I am also using a perpetual growth rate of 3%, which is actually in the higher range. So if anything, when we take a look at the growth rate and the perpetual growth rate that I'm using, this is actually not that conservative. But I do believe that SOFI has a lot of potential that I'm willing to pay a little bit more for this stock. Now the stock is currently trading at around $18. And if we take a look at this price to sales multiple approach and we use 6 on the low end, then I have a price target 12 months out at $16.88, which is a negative 7% return on my investment. So that's not something that I'm really looking to get into. Now, what I personally like is a price to sales multiple of 10 for the trailing 12 months. And that gives me a price of $12.51. If I can get into a position at around $12 to $13, then I would feel much more comfortable with my position and be more likely to hold through the ups and downs and buy the dips if I even get below this price target. Now, in order to get to that price, this stock would have to fall significantly. We would have to break this support at around $14, and we would have to head back to this support at around $13 to $12 a share. Now, that might never happen, and I might miss out on SOFI because of my price target being a little bit too low. But that's okay. I'd rather miss out on an opportunity than get into a stock that I think is valued too high. But the way that you can approach this, if you have a price target in mind that is decently lower than the current share price, you can use a strategy that's going to make you money weekly or monthly depending on the stock. And this is through selling options. Now, if we take a look at the options chain for SOFI, we see that we have weeklies. So for this stock, you can do it every single week. So let's say you have a price target of $14 or $15. Every single week, you could sell puts against this stock until it gets to your price target. So let's say you're selling them at $14 and you get around $3 to $4 per contract. Well, each week you will make $3 to $4. When the stock actually gets to $14, then you would buy 100 shares at that price. It is through this method that you can actually make money while you wait for the stock to hit a price that you're comfortable buying 100 shares of. Now, I think SOFI is a great stock to do this because 14 times 100 is only $1,400. So I think it's a great stock to sell puts against because it's going to work for a lot of portfolios. All right, that wraps it up for this video, mi gente. I thank you so much for your time. If you like this video and the content that I am providing, please consider hitting that subscribe button, ringing that bell, and smashing that like button. In addition, if you want to join the community, have access to a Discord server of over 500 investors where we talk stocks and cryptos every single day. Have access to a weekly report where I go over the top stocks for each given week, and also have access to free valuation spreadsheets. You can do so by joining the Patreon. A link is provided down below. It's $5 a month, and I think it provides great value, and it also gives you a direct line of communication to me and 500 investors. I'll catch you on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.